Ladies and gentlemen, good day and welcome to the Q4 and FY2024 earnings conference call of DCW Ltd hosted by Valorem Advisors. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need an assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorem Advisors. Thank you and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorem Advisors. We represent the investor relations of DCW Ltd. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the fourth quarter of the financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Satwik Jain, President, Mr. Amitabh Gupta, CEO, Mr. Sudarshan Ganapathy, COO, and Mr. Pradipta Mukherjee, CFO. Without any further delay, I request Mr. Satwik Jain to start with his opening remarks. Thank you, sir.
Thanks, Purvangi. Good afternoon, everyone, and welcome to DCW's earnings call to discuss Quarter 4 and FY24 performance. We'll start today's call with a brief on the industry and also moving on to the company's performance. It has been an extremely difficult year for the chemical industry across all products. The global sentiment has been weak, fueled by weak demand in China, leading to excess imports into India, and also weaker exports. Demand in India is not slacking, which is a big positive for the domestic market. Moving on to the industry dynamics of our products, we'll start with soda ash. There has been an increase in production of soda ash internationally. Increase in supply along with weaker demand in US and Europe has resulted in an oversupply situation, putting pressure on pricing. This year, however, we do not see any capacity additions, which we feel will lead to a rebalance in the supply-demand situation globally, bringing in some stability. The cheaper imports not only are putting pressure on pricing, but have also resulted in the domestic industry operating at lower capacity utilizations. For us, most of the year we have operated at lower utilizations due to our own mechanical issues at the plant, as we have already discussed earlier. These are being resolved and we hope to be producing at around 85% utilization in this fiscal. Like soda ash, PVC also suffers in the domestic market due to cheap products being dumped from China. However, the prices are gradually getting stabilized, indicating robust demand from downstream piping sector. The PVC pipe industry is set to score a hat-trick of double-digit volume growth of 10 to 12% year-on-year in this financial, signaling a strong demand from the end-user industries. Owing to this, PVC demand is expected to remain strong and is growing at around 8 to 10% per annum. Tightening of ocean freights across Asia are expected to increase the international PVC price announcements from major Asian PVC producers for June shipments. As for caustic soda, irrespective of the global situation, the oversupply in the domestic market itself is a challenge. With the ECU being under tremendous pressure, domestic industry has been operating at below 80% utilization. Moving on to synthetic rutile, the market situation in terms of TiO2 demand in China is improving, though there is still a severe pressure on pricing. Unlike quarter 3 of last year, we have seen some movement of our built-up inventory in quarter 4 and are seeing improvement in the demand situation from quarter 2, quarter 3 of this year into China as well as into other markets. As for CPVC and synthetic iron oxide pigment, they have been significant contributors for DCW in this year. There has been severe pressure on pricing of CPVC, again due to Chinese imports. However, as the demand remains strong and is growing, we have added capacity this year and have achieved our highest ever CPVC sales. Our new capacity is now operating and we are producing at around 100% utilization. As for SiOP, even with the weaker pigment demand in the international market, we have managed to achieve our highest ever sales for this product. Work on our line balancing capex is complete and are on the verge of commissioning. Commercial volumes, however, will catch up with a lag effect. Despite challenges in the chemical space, DCW has shown its resilience with continuous focus on specialty chemicals over the last couple of years, with investment in the segment yielding reasonable stability to our bottom line and has helped the company tide over the depressed environment in the commodity segments. The specialty chemicals EBITDA for the quarter stood at 46 crores as against 34 crores in the same quarter of FY23. Even in this environment, we have managed to post an EBITDA shy of 200 crores for FY24. For the first time in many years, we have our finance cost for the FY at a normalized level of 74 crores and have maintained our credit rating at A. Our long-term debt has also reduced by 100 crores this year. Our investment in the renewable energy project is also underway and are hopeful to start drawing power from this from the second half of FY25. With our investments completed towards the end of FY24 and the market situation improving, we see the benefits significantly picking up in the second half of this year and are overall hopeful for a better fiscal. With that, I request our CFO, Pradipta Mukherjee, to brief you on our financial performance. Over to you, Pradipta.
Thank you, Satvik, and good afternoon and welcome to the Quarter 4 FY24 earnings call. The financial highlights for the quarter is as follows. The revenue for the quarter stood at 622 crores as against 398 crores last quarter and 588 crores in quarter 4 last year. This is an increase of 56% quarter on quarter and approximately 6% YOY. The increase in top line was driven by higher sales in SiOP and CPVC, also marking our highest ever sales for the quarter. With early green shoots in export demand, the SR volumes for the quarter was also highest ever. However, there were certain cut-off benefits which accrued in this quarter from Q3. The PVC price and volumes remain stable with a slight improvement in net realizations being witnessed currently. The demand for caustic soda, lye and soda ash remains subdued with prices continuing to correct, however at a lower pace. The price correction was also witnessed in SR and CPVC quarter on quarter, but it is expected to remain stable from here on. For the EBITDA, we clocked a number of 69 crores compared to 24 crores last quarter and 104 crores in quarter 4 of last year. It's 1.9 times higher quarter on quarter, but a decline of 34% year on year. While there was price correction across all our product segments, the input cost did not see any meaningful correction. This has resulted in a margin pressure for the company. For the current quarter, we clocked at 11% margin as against 18% in quarter 4 of last year. Our continued focus and investment in the specialty segment has resulted in providing stability to the bottom line. The share of specialty EBITDA for the quarter rose to 67% as against 34% in quarter 4 of last year. The absolute EBITDA, I'd already mentioned by Satvik, stood at 46 crores for the quarter as against 35 crores in quarter 4 of last fiscal, and increased by 33% year-on-year. For the year as a whole, the revenue stood at 1872 crores as against 2634 crores in last fiscal. The dip of 762 crores is about 29%. The drop in realization across board has resulted in an impact, a price impact closer to rupees 620 crores, and lower volumes of soda ash due to continued technical issues. SR due to weak export demand had further contributed to the downfall of revenue. EBITDA margins for the year stood at 10% as against 17% last fiscal. The drop predominantly due to price erosions, as already mentioned in our commodity segment, while CPVC also witnessed a price erosion of 28%. The EBITDA for the year stood at 194 crores versus 443 crores down last year, down by 56%. It's important to mention here that the specialty EBITDA for the full year stood at 135 crores as against 115 crores last year, despite a price correction of CPVC as mentioned of 28%. Quickly to touch upon the balance sheet, the long-term debts stood at the year end at 409 crores as against 504 crores last year, a reduction approximately by 100 crores. The cash balance, the cash maintained in the balance sheet at 170 crores as against 168 crores in the last fiscal. The current ratio, however, for the company dipped to 1.13 versus 1.38 last fiscal. This was due to subdued business performance for the year. It's worth mentioning that the company has also completed its major payment for its growth project of 125 crores in CPVC and SIOP, which was announced earlier. The company has also further invested 20 crores in group captive solar investment. The financial benefits of all the above investments are expected to accrue in a phased manner with FY2024-25, while CPVC already has been commercialized and favorable impacts have been witnessed in quarter 4. With this, we would be open for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Sanjeev Davani from SKD Consulting. Please go ahead.
Namaskar, sir. Am I audible?
Yes, you are. Please.
Thank you. Thank you, sir. Sir, actually, I would just request you to kindly give an appraisal of pricing and production capacities of SIOP, synthetic rutile and CPVC now having expanded already. So at what monthly production rate we are running these plants, if you can kindly tell me.
Good afternoon. After our investments in the SIOP plant, we are running practically to about 85% of the capacity. We are doing about 75 tons per day against the installed capacity of about 85 tons per day. Synthetic rutile, we are running to practically full production, and CPVC also we are running to our full production.
But can you kindly, CPVC now at 20,000 or even more, because previously we used to produce some 13,000 tons against our capacity of 10,000 tons.
No. 13,000 tons is a combined capacity including the compounding. So the resin capacity stands, which was standing at 10,000 tons, that has become 20,000 tons now.
Okay. So I mean,
full capacity of 1,800 tons a month.
Okay. Approximately. Sir, so 20,000 tons per annum is our resin capacity, and when we convert it into compound, CPVC compound, then the capacity gets enhanced by how much percentage, sir?
2,000 tons, roughly by 20%.
Roughly by 20%. And when we do, we make compound out of resin, then we have to add certain things from outside purchased item, or within our in-house item we are adding there?
No, compounding chemicals we don't manufacture, so it is our purchased items.
Okay. So for us, margins are same whether we sell resin or we sell compound?
No, value add, is more or less, you can say it's the same.
Okay. So when we sell compound, our margins are better, sir. Okay, regarding synthetic rutile, I could not understand the figures that you have spoken. What is our capacity and how much we are producing per month these days?
Yeah. So post our investment into the capacity, the debottlenecking capex.
Synthetic rutile.
Also, synthetic rutile, our capacity is 40,000 tons. So we have been producing, let's say, at 90%.
Okay. So 40,000 per annum, or it is per month?
Per annum.
No problem. Sir. And we are running at 90% there also. Sir, last time in last conference you had mentioned about yellow SIOP, which will go to America and has gone for American approval. So is there any development to be understood about that product?
No. All our products are very well approved. Like today, America is our biggest buyer, and practically 60% of our production is exported. And our product is very well accepted by the buyers over there. So we are, frankly, the quarter 4 sales shows we sold total 8,000 tons, out of which practically 60% was exported and balance was in the domestic sale.
Okay, sir. Okay. So, sir, is there further sign of improvement in American consumption in days to come? Because they are also now coming out of recession or something like that, slowdown. So can we estimate that we can export more?
We would not like to keep all our eggs in one basket. So we will be exploring other international markets as well as the domestic market. So for the time being, even though the consumption in the US may improve, but I think we will be concentrating more on the other markets than USA alone.
Okay. And red and yellow, only two type of SIOP we are manufacturing, or even more?
Red and yellow. Now, very recently, we have come up with the black, which samples have been sent to the buyer, and the initial reports which we have got is it is very well accepted by the buyers.
Okay. So, sir, this time we produce 8,000 metric ton. So, how much we can raise it to? This is 8,000 metric ton on quarterly basis, sir. Am I right?
That's true.
So, sir, how much we can further improve on this capacity?
No. Let me clarify that 8,000 tons was not the production in the quarter. It was a little less. But then some of the stock went from some of the space went from the stock.
Okay.
So I think at best we can think of producing about 2,500 tons in a month.
In a month. Okay. Thank you very much, sir. All the best. These were very difficult periods, but regarding PVC, can you see margin improvement in coming days in the domestic market?
Yeah, we are seeing early signs of market improvements coming, but it's too early to celebrate our results. We have to see whether these are sustainable.
Sir, one fine point if I can touch upon, I was studying Epigral. So, are we planning to add certain products which we are not making and Epigral is making, that is Make Money Fine Chemical?
We have a separate strategy team. They will look into it, which will fit in our chemistry, and then we will act accordingly.
Okay, sir. Thank you very much and all the best, sir. Thank you.
Thank you.
Thank you. Before we take next question, a reminder to all participants, you may press star and one to ask questions. You may press star and one to ask questions. We have our next question from the line of Parth Chauhan, a shareholder. Please go ahead.
Good afternoon, sir. Thank you for the opportunity. So I just wanted to know that in light of the prevailing conditions in the chemical industry, can you give some insight on the company's revenue for the upcoming period?
So it would be very difficult as of now to give a guidance on the revenue. However, having said that, whatever revenues we've done this year is on a depressed price as what we have seen. And the prices have gradually fallen over the year. So yearly revenue, what you see is basically average of those prices, right? Now, what we are doing is we are only trying to focus on increasing volume so far as our specialty segment is concerned, where we see elevated margins. Now, that's where, with that thought, we had invested to double our capacity into CPVC and also debottlenecking SIOP. So to put a number in such a volatile situation would be difficult on the revenue side. But these are the drivers so far as our growth is concerned for next year. Like CPVC, our CapEx has been done, so we would be operating at a capacity of 20,000 metric tons per annum. We are eyeing a capacity of 28,000 tons of production of SIOP, which we intend to reduce the time lag for sale and target a 25,000 tons of sale for next year. We concluded around 20,000 tons of sales this year, a 20% growth over there.
Understood, sir. And secondly, I just wanted to know that moving forward, what would be the percentage contribution of specialty chemicals to the overall revenue coming forward?
So specialty chemical as a percentage of revenue is quite it's not that much meaningful because specialty chemical is high price, low volume with high margin, right? The idea, the endeavor of the organization to put in specialty is basically to bring stability in the bottom line. In a year like this, we saw that our total profits for the company has come at 195, 193, 194 odd crores. Our three commodity segments would have only contributed 60 crores. The balance 140 crores has come from the specialty. The idea is basically to put a stability to a bottom line and shift our mix towards the specialty segment. So our target is basically to take our specialty EBITDA to more than 50% in the outer year.
Okay, sir, understood. That's all from my side. Thank you and all the best to you for the future.
Thank you.
Thank you. We have our next question from the line of Rohit Nagaraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Sir, if you could just give us individual segment-wise, what is the current market environment? Where are we in terms of cycle? And how do we think margins or overall demand probably would start improving in the next foreseeable future? Thank you.
So we basically have, 5 major product segments. In SIOP, we have been seeing a margin very steady of around 35%. We hope that would continue or maybe slightly improve because of the economies of scales of additional production coming in. CPVC at current prices as well, we are seeing a 30% kind of a margin. PVC, we are a VCM PVC producer. The standard margin is 3 to 5%, but the profit swing happens because of the inventory. So when the PVC prices go up, we then report higher profits. If the PVC prices go down, we report a loss because of the effect of inventory carrying. Soda ash roughly is a stable business which gives 18 to 20% kind of a margin for us. We have been a bit challenged because of the technical issue to operate the plant at 80%. Once we go to 100%, we think we should be north of 20% in terms of steady margin. And what else? I think caustic obviously, as of now, the current prices has still been falling. So quarter on quarter there has been a reduction. We have now been operating caustic not for profit because it's not yielding profits. We are basically operating caustic to derive the inputs for synthetic butyl and CPVC. That is chlorine and HCl.
Right. And just from the industry demand perspective, in each of these segments, I mean, CPVC, we know that it's import substitute. So which is whatever we produce, we'll be able to sell it. But for the other segments, how has been the demand from the domestic market? And again, a similar thing from the exports for the product which are doing.
All products, I think, except caustic soda, I think we are in a reasonably good place in terms of the demand. Only caustic soda we are seeing a surplus capacity in the domestic industry, which will have some pressure on the production, capacity utilization and margin.
Right. And one last, if I can squeeze in. So now our capex are coming to fruition. How will be the incremental capital allocation we are looking at? Are we looking at any diversification into some other segments or the same segments we want to continue with higher capacity additions? Thank you.
So I think as has been our deliberations in our previous communications, we basically trying to make our south facility become chlorine neutral by adding value-added products. So we have some work to go, additional capex to come in our south facility to make the facility totally tied up and balanced in terms of chlorine, right? And also add growth through value-added products in our related chemistry. So that is a journey which we have to run for a year and a half maybe. Post that, we would have to venture into newer chemistries, which we've started discussion in the drawing board now. So premature for us to communicate that now.
Sure, sir. Thanks a lot for answering all the questions and all the best.
Thank you.
Thank you. We have our next question from the line of Parth Chauhan, an individual investor. Please go ahead. As there is no response, we'll move on to the next participant. We have our next participant from the line of Giriraj Daga from Vasaria Family Trust. Please go ahead.
Yeah. Hello, team. My first question is, would you be able to share the volume, sales volume detail for FY24 for each of the segment?
Could you be a bit loud, please?
Am I audible now?
Yeah, better.
Yeah. So would you be able to share the sales volume number for FY24 for each of the segment?
I think we intend to sell our capacity in the next year. Last year, what are you talking? You're talking for the year gone by?
First, I'm asking for FY24 and then the guidance for FY25 sales volume number.
I think we had done, we had operated at around the capacity, production capacity for, we started caustic and synthetic butyl. So synthetic butyl, we had operated at 80% capacity. The sales were at 75%. So basically there was some inventory built up over there. SIOP, we had worked at 65 tons per day as capacity, which is 18,000 tons or odd. We have done, we've surpassed that capacity and we have been whiskering distance of sales to 20,000 tons for the last year. Caustic soda, we would have done a 210, 215 tons all throughout the year per day and have sold that. So I would offhand not be able to tell you the quantity, but I can just check and get back.
Okay.
CPVC, we have done 10,000 capacity from the old plant and around 2,000 tons from the new plant. so 12,000. That's the quarter four, additions. Rest all soda ash we've operated at, we've sold 80,000 plus odd tons, and we have produced that much as only. PVC at around 1 lakh tons production and sale.
Okay. And the idea was to get the inter-segment also. So like PVC, we have mentioned production of about 14,500 for the full year. So I'm assuming that sales will be roughly about similar 14,000 level, right?
That is CPVC.
Yeah.
Yes, you're right. So our sales would be around 14,000 tons per annum. So we have sold. So we have not built up inventory in PVC and CPVC. We have built up inventory in SR and SIOP.
Okay. SIOP we have mentioned 21,570 is the production number, or you have mentioned sales here about.
And we have been selling. We have sold around 19,800 tons approximately.
Okay, 19,800. And then this number you expect it to go about 25, 26 this year, right?
That's what the intent is.
Okay. And the CPVC on West 14, we are looking at about roughly 18,500, 19,000, right?
We would try to reach a number of 20,000 tons next year. That's the full capacity of what we've laid down. So we hope to sell the entire 20,000 next year.
Okay. And is there an inter-segment between caustic soda, PVC, and soda ash? So I have the production number. So is there inter-segment?
I'll tell you. So for our soda ash sales may for next year go up to 90,000 tons, because we are planning to do a stopgap arrangement till such time the technical issues gets resolved. So we will be producing around 90,000 tons and selling 90,000 tons, and increase by roughly 10,000 tons. That's what we are planning. CPVC and SIOP we told you. PVC will remain same, 1 lakh ton production and sale. Caustic obviously will depend on how the prices play out. And SR, which is a 40,000 ton capacity, it obviously would depend on, since it's 100% exported, that obviously would depend upon how the export plays. But we are hopeful to liquidate 90% of the capacity for next year.
So what was the SR revenue?
This year would have been, our sales this year is around 28,000 tons. Okay, sir.
SR volume you mentioned 28,000 tons. What was the revenue number?
For SIOP?
No, SR.
So SR, it will be difficult to give you a revenue number, for projected for next year. And since it's subsumed in caustic division, it would be difficult for me to pull out and readily be to.
But last year, FY24, how much was that revenue? FY24 last year?
That's what I'm saying. So that number is subsumed as a part of my caustic division. So product, as of now, it's not readily available. We can let you know. You can drop the question for us.
Okay. Second, my question is what is the capex we are looking for FY25? And if you can break between the growth capex and sustenance capex?
Yeah, routine capex roughly is around 35 to 40 crores per annum. Growth capex is something we will just hold back. There's something of which we are with deliberating. I think the announcement will come soon. And some efficiency capexes we every year do. That's to the tune of around 15 to 20 crore rupees.
So roughly 55, 60 crore is fixed, and growth capex as and when you decide will be additional over and above.
Yes.
Okay, and that's obviously looking at the cash flow should be funded from the internal accruals.
No, we would be if for these capexes which are maintaining that the 60 crore which you counted will be from internal accruals. The growth capex would be obviously funded. This time we will go for bank borrowings for funding the growth capex.
Okay. So what is the average cost of debt as of now?
It's around 10%.
10%. Okay, sir. Thank you and all the best.
Thank you.
Thank you. We have our next question from the line of Saket Kapoor from Kapoor Co. Please go ahead.
Yeah. Namaskar team, and firstly thank you for this opportunity. Sir, you alluded to the fact that there is an additional capacity that has been commercialized in the caustic soda segment. So currently, I think so. Caustic soda is also country used to be net importer of caustic soda. So what's the status for the current financial year, 23-24? What have been our import on the caustic front, and what's the likelihood because of the additional capacity that has been commercialized?
So, sir, we have not added any capacity in caustic in the recent past. I think there's some miscommunication.
Sir, I'm talking about the country, since you mentioned that the country capacity has moved up significantly.
Yes.
That will lead to, yes. That was my question, sir.
So I think,
see, the country capacity, let me put it this way, when the caustic prices were quite robust, lot of the local manufacturers, they thought of investing in this particular business. Unfortunately, the demand has not risen to that extent, so there is a surplus today. And what happens when you produce caustic soda, chlorine is like a co-product. So chlorine prices are very, very subdued. Frankly speaking, sometimes it is like a negative contribution. And that is the reason at least DCW has not put in any new monies, investments in caustic soda business.
Correct, sir.
And well, the rest of the industries also are struggling. So as and when international prices firm up a little, we export. Otherwise, I think per force the production gets dropped because if the chlorine cannot be utilized, you cannot produce caustic soda.
Correct.
So frankly, caustic production in the country gets regulated by chlorine and hydrochloric acid consumption in the country.
Okay. So do we have the import number for the last financial year for caustic soda?
Offhand we don't have, but then we can possibly give it to you subsequently.
And for soda ash also, sir, the realizations are down significantly as the prices did corrected from the peak. So what's the scenario for caustic for soda ash, since I think so the domestic demand and supply are equally balanced? And how much have been the import for soda ash also, sir? If you could give some color.
You see, the local capacity is not sufficient to take care of the total demand in the country. But all said and done, internationally, there is so much of surplus in soda ash that the prices are very, very subdued. I think we have hit the bottom. It cannot go any further down. So let us hope the prices will firm up a little in the near future. But all said and done, India is a net importer of soda ash.
Okay. I think, sir, earlier, last call or before that, you people were alluding to some unabated import from countries like Turkey and Iran. So I would just wanted to understand what have been the quantity of import for soda ash vis-a-vis, if any competitive number if you could give. And currently, sir, exit of March, what are the price trends for soda ash? Any color you can share?
so whatever we have the numbers available with us, I think the caustic soda import, soda ash import for the year last, that is FY23, was around 4.8 lakh tons. I mean, this year I think it's 11 lakh tons, which is what they have. So it's almost doubled from last year, and for reasons what we had spoken last time. And we think that the prices more or less would stabilize from here on, as Mr. Amitabh Gupta said.
Okay. And our issue with the production facility, when are we going to correct? Where are we in midst of getting the optimum desired quantity from our soda ash plant?
I think our support from the technical disruption comes from Germany, and that we have done whatever has to be done from our side. We think that the support will be in place somewhere in Q4 of FY25. So we have to live with 3.5 quarters with a 90% kind of our capacity.
Okay, sir. And sir, for the net debt number, can you just allude the number once again? What is our net debt?
Net gross long-term borrowing has come down by 100 crores to 409 crores. The FDs and the cash in the balance sheet is 170 crores. So if you talk, we are talking of 280 crores of net debt.
And what is the short-term borrowing, sir?
Short-term borrowing, I think we have around 25-26 crore.
25?
25-26 crore.
Only short-term borrowing of 25-26 crore.
Yes.
Okay.
When I say short-term borrowing, I'm talking of short-term funded borrowing.
No, I want the full number.
In terms of LC is what is rotational, which is around 330-40 crores, which is subsumed in my creditors.
Right, sir. And our current maturities?
So the current maturity would be 131 crores to be precise, which is an outlay of cash for next year.
Okay. And that we are going to pay from our cash generation only? Are we going to borrow further?
So, I mean, we have to pay that from our generation only. I think that's what we have done this year also. So, even this year being very bad, we had serviced the 125 crores of repayment, and we have serviced 74 crores of interest from our current accruals only.
Correct, sir. So our de-risking strategy has borne the fruit for this current year when the commodity products have declined, and it is the support from our value added or the special chemical products that has contributed. So going ahead also, we can continue to be dependent on these synthetic rutile and CPVC as the main contributors. Is that understanding correct?
I think what we are thinking over here is a true mode for the company would be SIOP. CPVC obviously we continue to consider that as a specialty. SR obviously there are price swings based on the market we sell, but it's obviously at an elevated margin level compared to our commodities. Okay. Our commodities so far as caustic and PVC has been struggling for last 3-4 quarters now.
So for SIOP, last point, what is our current capacity utilization levels and how much more capacity augmentation have we contemplated?
Our capacity utilization is 100% at 18,000 tons what we were operating. We have sold more than our capacity this year at around 20,000 tons. As we complete the debottlenecking, the capacity gets recasted to 27,000-28,000 tons, which we intend to fill up in the next 1.5 years. The additional volumes.
Last point I missed, 20 to 27?
So our capacity will go up from 18,000 tons to 27,000 tons. That is production capacity. And our sales, what we intend for immediately for FY25 will be around 25,000-26,000 tons, which gets mitigated. That's what I'm saying. In a year and a half, we will be able to sell our full increased capacity in the market.
Okay. And for the price trend, sir, can you give some color? How are the price? You told that there is
relatively been firm for SIOP, and it's not corrected, with the market corrections of other commodities or even CPVC. And we hope that the price is maintained at this level.
Okay. And how should we benchmark it, sir? What are the key indicators to track SIOP prices?
It's basically the international pricing. All said and done, China is the biggest producer in the world. So we have to follow Chinese prices. And locally also, all said and done, it is China pricing if you ask me.
Yeah. Thank you, sir, for all the answer and all the best.
Thank you.
Thank you. Before we move on to the next question, I would like to remind all the participants you may press star and 1 to ask questions. You may press star and 1 to ask questions. We have our next question from the line of Sri Ram, a shareholder. Please go ahead.
Thank you for the opportunity. What is the CPVC compound capacity?
12,000 tons per annum.
Okay. So that has not changed. Okay. And sir, any further expansion in resin or compound? Because currently you said we are running at full capacity.
Not yet. We have not formed up anything as of now.
Okay, sir. Okay. Thank you so much.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thanks everyone for joining the call today, and hope we've been able to answer all your questions. If you have any further information requests, you can connect with our investor relations advisors at Valorum, and thank you once again.
Thank you. On behalf of DCW Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your line.